Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of everything you need to know about tax-free savings accounts. Are you looking for a smarter way to save without worrying about taxes chipping away at your hard-earned money? A tax-free savings account, TFSA, might be your answer. It's a flexible investment tool that lets your money grow tax-free, offering a solid plan for saving without the usual tax burden. Whether you're saving for a rainy day, a new car, or your retirement, a TFSA can help you reach those goals faster. Unlike other savings options, the money you accumulate remains untouched by taxes, both when it grows and when you take it out. This makes TFSAs a key player in personal finance and tax planning strategies. Ready to dive in and see how it can work for you? What is a tax-free savings account, TFSA? A tax-free savings account, or TFSA, is a flexible savings tool designed to help you grow your money without the burden of taxes. It allows you to save for various goals like buying a home, funding education, or planning for retirement while enjoying significant tax advantages. The beauty of a TFSA lies in its simplicity and accessibility, making it an attractive option for many Canadians. Let's break down the essential features and purposes of a TFSA. Definition and purpose of TFSA. A TFSA is a registered account offered by the Canadian government. Unlike regular savings accounts, any money you earn in a TFSA is not subject to taxes. This includes interest, dividends, and capital gains. The main goal of a TFSA is to encourage Canadians to save money more effectively. With a TFSA, you can save for short-term goals like vacations or emergency funds, build long-term wealth for retirement or significant life events, invest in various assets such as stocks and bonds. Key features of a TFSA. Understanding the features of a TFSA can help you maximize its benefits. Here are some main points to consider. Contribution limits. Each year, you can contribute a specific amount to your TFSA. Keep in mind that unused contribution room carries over to future years. For instance, if you don't contribute the full amount one year, you can add that amount to your limit the next year. Tax-free earnings. The money you earn within the account, whether from interest, dividends, or capital gains, is tax-free. This means you keep all your earnings without worrying about the taxman. Withdrawals. You can take money out of your TFSA at any time without penalties. If you withdraw funds, that amount gets added back to your contribution room in the following year. No impact on government benefits. Money in a TFSA doesn't count as income when determining eligibility for government programs. This feature makes it a smart choice for those who want to preserve their benefits. Variety of investment options. TFSAs can hold various investments like cash, stocks, mutual funds, and bonds. This flexibility allows you to choose the best investments for your financial goals. Why consider a TFSA? Many Canadians are turning to TFSAs due to their flexibility and tax benefits. Here are a few reasons you might want to consider opening one. Accessibility. TFSAs are available to anyone over 18, making them easy to access for young savers. Encourage saving. With no tax on earnings, TFSAs motivate you to set aside money for the future. Financial growth. The combination of tax-free growth and flexibility can significantly boost your savings over time. Are you ready to take control of your financial future? A TFSA may be the perfect tool to help you achieve your personal savings goals without the weight of taxes holding you back. Eligibility for TFSA. A tax-free savings account, TFSA, is a fantastic way to save money for a variety of goals without paying taxes on the growth. But before you start saving, you should know who qualifies to open a TFSA. Let's break down the main eligibility criteria in easy terms. Age requirement. To open a TFSA, you must be at least 18 years old in most provinces. Some areas, like British Columbia, allow you to start at 19. This age rule makes sense. TFSAs are designed for adult savers who can understand the responsibilities of managing their accounts. If you're younger than 18, you'll need to wait. Residency status. It's not just age that matters. You must also be a Canadian resident. This means you call Canada home, live here, and have a valid Canadian address. If you move abroad but still consider Canada your home, you can keep your TFSA. However, once you become a non-resident, there are specific rules about contributions and withdrawals. Social Insurance Number, SIN. Getting a TFSA isn't possible without a Social Insurance Number, SIN. This number helps identify you in Canada and is vital for tax purposes. Applying for a SIN is a straightforward process and gives you access to financial products like TFSAs. Contributions limits. While anyone eligible can open a TFSA, it's important to know about contribution limits. Each year, there is a set amount you can contribute without facing penalties. The annual limit can change, so staying updated is key. If you don't contribute every year, unused room rolls over, which means you can catch up later. Multiple accounts. You can have more than one TFSA. Imagine this as having different jars for your savings. Perhaps one jar is for a holiday, and another is for a new car. Just keep in mind that the total contributions across all your accounts cannot exceed the limit. If you do, you'll face penalties. Additional notes. Minors. While minors can't open a TFSA, a trustee can create an account for them once they reach 18. Non-residents. If you're a Canadian citizen but living abroad, you can still have a TFSA. Just remember the rules change for contributions once you become a non-resident. Understanding the eligibility for a TFSA helps you take steps toward saving effectively. It's important to check that you meet these requirements before diving in. Are you ready to start your savings journey? TFSA contribution limits. Understanding the contribution limits of a tax-free savings account, TFSA, is crucial for making the most of this tax-advantaged savings tool. It's not just about knowing how much you can put in each year, it's also about how unused contribution room can work in your favor. Understanding contribution room. Every year, the government sets a maximum amount you can contribute to your TFSA. This amount can change from year to year. As of recent updates, the annual contribution limit is $6,500 for 2023, but it's wise to check the latest figures as they may adjust for inflation or other reasons. So what happens when you don't use all your contribution room? The good news is that any unused room carries forward. This means if you don't max out your contributions one year, you can add that amount to your limit in the following years. Picture it like a bucket. If you fill it partially one year, you can still add more water, or in this case, contributions, in the future without losing what you already had saved up. Here's how it works. Cumulative contribution limits. If you missed the contribution limit in previous years, don't fret. For example, if your limit was $6,000 in 2022 and you only contributed $3,000, you can contribute the remaining $3,000 next year, plus the new limit for that year. Example breakdown. 2021. Limit was $6,000. You contributed $3,000. Remaining $3,000. 2022. Limit increased to $6,000. You can contribute $6,000, total of $9,000. 2023. Limit increased to $6,500. You can now contribute $6,500, plus any leftover contribution room. Contributions over time. As you accumulate unused room, your ability to contribute increases. Remember, each year builds on the last. It's a smart way to grow your savings without the pressure of a deadline. Here's another prompt for you. Have you checked how much contribution room you have? Understanding this can boost your savings potential. Keep records and stay informed. Don't let your unused contribution room go to waste. By actively managing your TFSA contributions, you can truly maximize your savings and make your money work harder for you. Investment options within a TFSA. When it comes to saving for the future, tax-free savings accounts, TFSAs, offer a flexible way to grow your money without having to worry about taxes. This account allows you to put in different types of investments, making it a powerful tool for your financial goals. Whether you're saving for a home, a vacation, or just building wealth, TFSAs can adapt to your needs. Comparing TFSA with other savings accounts. Now, let's see how TFSAs stack up against other popular savings options, like RRSPs, registered retirement savings plans, and regular savings accounts. Each one has its strengths and weaknesses, so understanding these is vital for making smart financial choices. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.